Whoopsie. Good afternoon. It's Monday. Scott Redler T3 Live. Welcome to today's recap. Started off today, market didn't really know what to expect. You had weakness in Asia, you had the exports worse than expected, and you still have a few tensions going on in the Ukraine, and PS, the broader indices held higher. The 8-day in the S&P held again. Some of the key sectors also held higher, but some of those key momentum names that we've been pretty much, I guess, spoiled with, that were holding their 8-day, went below it, some touched a 21-day. Last week when we broke out, none of those tech-type high beta names made new highs and gave you some power. Every time I feel like I've added to a winning long, it reduces or ruins the prices. So it's been a bit frustrating, and even today, you have the TV on in the background, and you hear, oh, S&P back at historic highs or all-time highs, and traders that are trying to find where that action is. It's there, but it's not the easiest to find. And if anyone tells you, then you know what, tell them to email me what they're doing, because they must have the secret sauce. But there is stuff to do, and if you maybe do a little less until there's more clarity, you'll get by some of the days that it feels like there's not much to do. You look here at the chart of the spiders, and you know you have just what looks like a somewhat very strong technical picture, right? You had the red dog reversal down here at 150-day when everyone said the world was going to end or go down 15 to 20%. You had a potent move to the upside, right back to prior resistance, and then it took a little while to eat through it. Went through it, and then this was when the Ukrainian news hit, and what did we do? We went below the 8-day, but closed back above it, held the 21-day, showing you that the market really didn't mind it too much. Then gap up, and since then the gap held on Jobs Friday. It looked more like a doji when I saw it the last time, but whatever, closed off the lows. And then today we were below Friday's low for no time whatsoever. You know, in the VTF, a lot of us were trying to cover some of our spiders there, thinking, okay, you know, we held the 8-day, we're coming back up. And but stocks really didn't take off with the spiders. Even in the last move into the close, it felt like, you know, you look at my VTF, I'm not exactly sure how many longs I have, but maybe 10, 12 longs, and it was hard to make any money. But here we are at that top. Let's go through a few key sectors. XLF, continuing to hold the prior breakout, so it's showing you some money staying in the banks, and it's letting the 8 and 21-day catch up. The bios finally, you know, had a green day. If you want to put a line here from the prior breakout, still holding that. Perhaps it's wedging, and I've nibbled a little bit on the IBBs today, thinking maybe it tries to come up a little bit and test that area. Some people were talking about some of the strength in it, like Amgen, like that's a big day. So I figured I didn't know really which buy I wanted to go with, so chose the IBBs, you know, to see if I could catch a little bit of a bounce type trade, if that's going to hold this. Just back to the banks real quick. Some people were just asking me what did I do at Bank of America. Well, I'm back to a full tier. Pretty much held the prior breakout. This was the nice trade to the upside, topping tail, digesting. I don't know if it's just going to get up and go, but it is holding the moving averages. I'd like a little bit more time here, but I want to make sure I have at least a tier 1 so I could add for a momentum tier through this prior high if it goes. And this had a nice green day and showed some relative strength, as you know, per the banks. You look at something like Goldman, what did it do? Flagging higher. So the banks are a more positive spot. You look at the Qs, what did the Qs do? Qs are still hugging the 8-day, but not much to say there. This actually filled the gap, but just choppy, lethargic, but it's up there. What did like the OAHs do? OAHs still riding the 8-day. What did the XLEs do? Still riding the 8-day. If you're using the 8-day as your vehicle and you're buying it when it hits the 8-day, you're doing pretty well. You're just not able to catch a breakout yet. But look at this. It's getting pretty darn close, you know, to moving above this level. This should be on our radar tomorrow. I might even include some names from this in the morning call. Well, I'll take a look. What else? Let's start talking about stocks. I think one thing that threw off some traders, just because we like to trade the names like Netflix and Google and Amazon and Apple and Tesla, and none of those have really acted that well. Whether they're just basing and need some time, or whether it's a signal, you know, it's too early to tell. But I know something like Netflix, some guys made some money short, right? Because we've been talking about it's been following this 8-day, and then it finally broke below it. This time you actually could have made some money. Last time it tried to break below, it engulfed it. So, something to take notice. Not end of the world for Netflix, but they let it happen. But it's still above the 21-day moving average. Google, what'd that do? A little bit below the 8-day, nothing so severe, not much of a trade there, still above the 21-day. Tesla, I talked about, looking at it this morning, thinking about if a wedge is being built here, that perhaps we can go from negative to positive, and it pretty much went below the level and still not giving you a true signal to buy. It did come a tiny bit off the lows, but still not acting like Tesla. I didn't take any. I'm going to wait till tomorrow. Maybe this was the level versus here. It's still above this gap. It's below the 8-day, so that's something a little different. It's been hugging the 8-day for a while now. It's touched the 21-day a few times, so to me, I want to wait to make sure that it still holds the 21-day, and then if I see some kind of real signal, maybe I'll get back involved. So far, if you were holding it with a high-level stop, here it was, because you thought maybe it could be pent up to go, and it didn't happen. It's, I know it's not the same group, but Solar City has trickled all the way down. Below the 21-day, I was looking at this today too, and it really couldn't, it's getting below this trend. Couldn't find a friend, but that's what happens when you put off earnings twice. I think the earnings are on Wednesday, we'll see. So below the 8 and 21-day, curling lower, still above the 50-day. So still deemed strong, but not as much momentum as when it was pent up and kept going, like when it was holding the 8-day right there. So just note that. Listen, when you trade momentum names, which is what we try and focus on because they move, you have to notice slight, subtle differences when the momentum changes, so you know the speed, you know the composure, you know the risk. The 3D printing stocks were great for a year and a half, and then there was some slight momentum changes where they started to not hold the 8-day. They started to get choppy through the 21-day, and then some trends broke and the momentum left. So that's when you leave. If you look at Triple D, we'll see what was a signal there. This is when you look at this. It was following the 8-day and the 21-day this entire time. Then, if for the first time it broke below the 8-day, came below the 21-day, bounced back, made a lower high, then started to get below the 8 and 21-day. Here it's above, riding the trend. Now it's below, giving you a signal to be careful. Momentum is changing here. And then it continued to go lower until finally at a capitulation moment when they came out with whatever it was. I think they pre-announced and gapped lower, and that wound up being a nice day trade. If you sold it, when it broke this key area right there, you had the luxury of trying it for a trade. That's why today I'm like, maybe it's worth a trade to look at, since it's down 4 days heading into that Barron's article, so perhaps it's priced in. But there just wasn't enough interest. Now we'll just figure out if 62.77 holds, or if it's even worth the trade. It might just continue to dribble. So I watched it a few times. It wasn't really worth our time. It's at the 200-day. Let's see what it does this time. It's not really that extreme enough for me to have that big of an interest. Let's see what did SSYS do. Did it act better? SSYS did wind up going green. So if you bought it on the down open, you did better than selling it after a move lower. And if you use this high-level area as your stop, when it broke to the downside, you had the luxury of retrying it as a trader. What else? Apple. Still hanging around. It still has some interest. I'm still somewhat interested in it. You could draw this line here where now here's your descending channel. This was really the last good trade we had when it had the red dog reversal, or even when you had the nice gap up when there was some news they were buying back their shares, and then it reversed, came back in, put in a higher low, and now it's right below the 50-day. So what I did is I bought some options that go out 2 weeks to not this Friday, next Friday, the 535. So this way I don't have to buy strength. Every time I feel like I buy strength here, it ruins my cost and I lose money. Today you could have had a tactical cash flow trade. It was down $1.50, went up $1, and boom, $2.50 move. I know it doesn't sound like a lot, but for an active account, you can make a decent amount of money. But if you added to it, it got hurt. So for me, I said, you know what? I want to be in just in case something comes out and it ignites through this, okay, which it might not. So I'll do it with options versus adding to it unless on highs and ruining what was a decent tactical trade. So all in all, it's still in this wedge type pattern, and I'm playing for an upside break versus a downside break. I'm anticipating, but I'm not doing it with any type of size because I don't know. If it were to break and close above this with authority, and maybe they send out an invitation for their iPhone 6 or for a wearable or for something, or they come out with some kind of, I don't even know what it's going to take, but here's that line, and we'll see what happens next. As far as some of those fuel cell stocks, unbelievable moves. I got to give it to Darcy, who was there early. I know I played it twice in that chart, and I did pretty well with it, but didn't have any. I wasn't in on Friday. I was getting my dog, who's doing great. Just a little tired today. You can see some of my oldness coming out because, just like a baby, it hasn't really slept through the night. And now instead of getting up at 4:45, I'm getting up at 4:15. But that's something else. So with that said, yeah, plug, another huge move. If you're just shorting this thing, it hasn't given you a signal yet. I know it's extended. Sometimes it's a hard to buy, but doesn't necessarily mean it's just a short. I know this was the last time I kind of felt comfortable looking at it for a trade. And then this is, I think, when, no, we actually took it home long and you had a nice trade. And then there was another move. Look at this, technical move, okay? Let the 8-day catch up on Friday. I can't believe I missed this. Above 709, closed strong, and then you had a gap up. And now, who knows what happens next here? If you're just shorting it, you're using your opinion. Wait for a signal. Let's see what FCell did today. FCell, wow, what a catch-up move, boom. Doji today, so that means if you were long, it maybe reduce some for a rest. What did BLDP do? Wow, this whole group, if you saw, it's starting to go, look at this nice technical pattern right there, and then it's been hugging the 8-day and just continuing. Nice little setup here as it got above this $6 and gave you a nice percentage move. Some are saying because of this wild action in the spec names and you see lethargic action in the high beta names, maybe that's typically a sign of a small little top. I don't know. I'm not going to play it that way, but it's going to be in the back of my head. If I have 10 and 11, 12 longs and the spiders jump 60 cents and my P&L doesn't go anywhere, either I'm in the wrong stocks or it's that hard. And not every day is going to be such a good day, so to speak. Last week there were a few good days in that mix of the week, and now with the digestion, there may not be some blockbuster type A trades or A plus trades. So I guess today the trade was Boeing. I know guys on the desk were trying to play a breakout into this gap and made no money buying every time there. And then today they're like, screw it, it's down, and boom, opened lower, closed on the highs, and that was probably the same distance of a trade as if it would have broke up into the gap. So it just shows you perception-wise what type of trade you want to be in. And now it probably fills the gap, and then you have a new channel to trade with Boeing, just a hard stock. Same thing goes with some of these oil guys like Schlumberger. Went home with it on Thursday, got stopped out of it Friday. Now I'm back in a little bit. It's still building this pennant type pattern here, a little red dog reversal, hugging the 8-day. Maybe now it gets going. We'll see. Halliburton, I didn't buy back. I feel like it's still in the game though. MPC, pretty strong, right at the top end of that range. Real quick, the Ags still holding some ground here, holding the 8-day CF, best in breed leader status. I went back into some POT today as it's holding the 200-day, trying to flag above that recent breakout. Hasn't done that in a while, so I'm in some. Next add could be if it were to take this area out and continue. You look on the weekly chart, still seems like it has some room to retest this broken big-time support. And look where it came from. This thing was a lot higher back in the day. Anyway, with that said, it's still a weaker stock, but for some reason I feel more comfortable buying this one than some others. We had a nice trade last week above 34. Now we'll see if it continues. Mosaic, what are you doing? Holding the 8-day. So now this group is starting to hold the 8-day and continue. Visa, getting tight. I nibbled a little bit today. I think this was Sperling's play of the week. Sometimes it takes the first day he does it. Sometimes it takes a few days. Keep it on the radar. Still looks okay. Needs to really start getting above 225 to 227 for it to go. Let's see what its cousin MasterCard's doing. Yeah, not too much. Hanging in there. I guess we'll see what happens there. What did gold do? GLD. Yeah, not falling apart. Hugging above the 200-day after a nice move to start this year. Still above the 21-day, so the bottom hasn't fallen out here. TVTs are kind of interesting also. You had remember we talked about this gap and go, which was your first igniting move for this if you wanted to be long an instrument to help with if rates go higher. Now you have another gap here. If this continues to hold this gap, and I know this is a very gappy type instrument, then goes sideways, then perhaps it'll have enough strength to take out this area, which is like 72.50. I'm going to wait a little bit longer. Unfortunately, I saw this happen, and I just didn't get involved there, so I missed this. I feel like I'm chasing. But just so you remember, not saying the same thing happens again, but remember when this gap happened, which was way back here, went sideways, and that's what ignited the move. So we'll see if this gap could now help support this one, where now it's above the 8 in 21 days. It has some resistance to work through, but the more it goes sideways, perhaps it could take place. So in conclusion, the Redler All Access product did launch today. Hopefully you bought it. If you didn't, I understand. Money is hard to come by these days, and not everyone has the means to do so. We tried to price it for those who were on the note at a level that wasn't too painful. I think we did it at $149 if you were on the note, and then if you weren't and you were on the Twitter feed, maybe $200. That's $200. You're talking less than $20 a month for. Usually, I talk about 18 to 20 stocks on there where there's potential for nice maneuvering. I talk about the market. I just put it out there, my game plan that I'm going to be focusing on that day, and maybe my thoughts for the week for how I could perhaps make some money each day and each week. And it's up to you how you want to do it. Everything is somewhat launched. I appreciate the patience. I know some emails got caught in our server. Some went out a little bit late. Within this week, we'll make sure all the issues are solved. Customer service is working hard on it. Our video department's working hard. We're going to make sure we try and get this product out to you. Hopefully, my goal is by 8:30, the latest. It might go a little bit later, but if it does, I'm going to be knocking down some doors to make sure you get it close to that time, because I know that just like myself, I like to be prepared early. I like to watch everything early. I like some time to actually let it sink in and then be prepared for the day. And that's what my product, in my opinion, is all about, is getting you prepared for each and every day as real time as possible. I'm in here in the morning at 6:30 putting it together. I'm taking into account upgrades, downgrades, overnight news, where stocks are trading pre-market, to help identify some of those tactical quick cash flow opportunities, and then the charts that are setting up for something that could go a little bit longer. And our off the charts product is the one that goes out at night. That's the visual. A lot of things that I talk about, potentially in the note or on Twitter, if it's setting up, we put it off the charts, you could see it, you could grab it, and you could really look at it and see why we're talking about this as a potential move. Usually, if it's on off the charts, it's something that is set up for something a bit more sustainable and not as short-term tactical. And I know that off the charts is for those who might not be in front of their computer all day long, but want to be involved in good setups that could trigger, where we can give you guys some outcomes. So there's a lot out there. If you're frustrated and you see the market at all-time highs and you're not performing or participating, and you're not using all your resources, you got to change it up and figure it out. And there's still a lot of year left, and you got to do something different. When you're not in line with the market, you do something different, and hopefully then you have success, and then success breeds more success, and then all of a sudden, you're stepping into the batter's box with a lot more confidence, and you're hitting the ball further. Happy Monday. See you tomorrow morning with Brittany. Have a good night.